A high credit score could be the determining factor of whether you qualify for a mortgage, help you get a lower interest rate on a loan, and you might even look better for potential employers. And that's why in this video, I'm going to show you everything that you need to know in order to number 1, boost your credit score. Number 2, increase your credit score today for basically $0. And finally, number 3, save thousands of dollars along the path. Each tip that I'm going to show you in today's video is actually going to help you get one step closer to that magic perfect credit score. So make sure that you pay attention and listen closely all the way through this video. There are 5 different pieces of data. The biggest piece of data that you want to make sure to focus on is, drumroll please, payment history. In fact, your payment history takes up 35% of your credit score. So if you have a long payment history, that's a good thing. And the reason why is because the first thing a lender wants to know is whether or not you pay your bills on time. If you don't actually make your payments, then you're probably higher risk to the lender because they know there's a chance you might not pay them back. If, however, you've been making your bill payments on time every single year, then chances are you're probably lower risk. Why? Because you make payments to the lender. So what actually happens if you miss a payment? My friends, that's actually a bad thing. In fact, if you miss one single payment, that actually stays on your credit report for 7 years. Make sure that you always make minimum payments on your credit cards or on any other loans that you have, like student loans, auto loans, mortgage loans, the list goes on. Minimum payments, even though you might not be paying off the full balance, which you should, but assuming that you're not, minimum payments count as making payments on time. The second biggest part of the pie is how much you owe. In fact, this actually makes up 30% of your overall FICO score rating. So first of all, I want you guys to think about how many credit accounts do you have? Do you have 5 credit cards, student debt, an auto car payment, and a mortgage loan? If those are the case, make sure you list them out. Now, I want you guys to think about your balance. How much do you actually owe on every single loan that you have? So for example, let's say you have $10,000 of credit on your credit card. That's fantastic. But let's say you actually have a balance of $9,000 on that $10,000 credit card. That means, my friends, you are taking up 90% of the available credit. That's really bad. Don't do that. That, my friends, is what you call overextended. This concept is actually called your credit utilization ratio. A credit utilization ratio essentially looks at the percent of the available credit that you are using. Now, if you have a really high percent, like let's say 90%, that's really bad. And lenders won't like that, which means your credit score goes down. And generally speaking, the lower your credit utilization ratio, the better it is, which means your FICO score goes up too. Now, typically speaking, a rule of thumb is to have about a 30% credit utilization ratio. Okay, my friends, let's talk about the third point, your credit history. In other words, how long have you actually had your credit accounts open? Credit history accounts for 15% of your overall FICO score. Just like fine wine, a FICO score will get better with age. So my friends, unfortunately, if you're brand new to getting credit, you're probably gonna have to wait a little bit in order to boost your credit. Now, something else I want to actually point out in this particular section is FICO score looks at the average age of your accounts. And what that means is it looks at your oldest account, it looks at your newest account, and then it calculates the average. So whatever your average is what will impact your credit history. So in other words, you don't always want to open up new accounts every single day, right? Because the newer they are, the lower they bring your average, which ultimately lowers your FICO score. All right, my friends, the fourth part of the FICO pie is a credit mix. Your credit mix actually makes up 10% of your overall FICO score. The reason why the credit mix is part of the FICO puzzle is because lenders want to look at how well you can manage different types of accounts out there. We're at the 5th stage here. The 5th piece of the FICO puzzle here is the number of new credit accounts that you open. Now, this piece is also worth 10% of the FICO pie. And the reason why is because if you open several different credit accounts in a very short period of time, That's bad, and that signals a risk to lenders. All right, my friends, those are the 5 pieces of the FICO score. Now let's figure out how you can boost your own credit score. The very first step that I recommend anyone to do is get a free credit report. Don't go for sites that actually charge you $50 a credit report. Click cancel right away because those guys are scammers. You have access to 1 free credit report every single year from the 3 credit reporting agencies. And those are Equifax, TransUnion, and Experian. And let's say you want to get more than 1 free credit report. That's okay, my friends. Thanks to Credit Karma, you can actually get your free credit report. And not only that, Credit Karma also gives you insights, they give you tips on what you can do to improve your credit score, and they give you kind of a summary of what has been going on in your credit history. So that credit report from Credit Karma is another great way to get a free credit report without paying for it. Now, what do you actually do with your credit report? Did you know that 1 in 5 people have an error on at least one of their credit reports? That's crazy. Plus, that error could cost you a lot of money. We're talking thousands of dollars. So the very first thing I want you to do once you get your credit report is take some time and look through it, my friends. It's also important to take a look at how late these late payments are. What if you actually see an error? What if you see a random bankruptcy, for example, that's not yours because you've never been in bankruptcy? And what if you see another type of error, like credit card that you've never actually opened? Well, my friends, here is what you do. You submit a dispute to that credit reporting agency, either by phone, mail, or online. What you want to do is you actually want to explain the error. You want to identify what exactly is incorrect. You want to explain why that's wrong. You want to provide as much evidence as you can, and then you want to submit it. After you submit your dispute, the credit reporting agency will have 30 to 45 days to actually investigate your claim. After that period is up, the credit reporting agency has 5 days to actually give you a notification. It's going to notify you either 1, that you actually were right, or 2, that you were wrong and your claim doesn't actually go through. All right, guys, this is the second tip here. Pay your bills on time. Make sure that you make all your bill payments every single month when they're due. Now, again, I don't mean paying off the full balance, although that would be better for you, but you don't have to pay off the full balance. All you gotta do is make the minimum payments, and that's good. Now, here's a quick tip for you, my friends. Do auto pay. When you do auto pay on credit cards, it's going to make your life so much easier because you don't actually have to think about it. You don't have to log in online, and you don't actually have to click yes, pay. The third tip is getting rid of all late payments. Now, as you know, your payment history actually makes up 35% of your FICO score. That 35% is the biggest category, so you want to make sure you're on top of it. Here, my friends, are several tips that you can do to lower your credit utilization ratio. Number 1 is pretty obvious: pay off your balance. Number 2 is actually calling your lender. Give the credit card company a call and say, hey, can you increase my credit line? And chances are they're probably going to say yes. Why? Because they want you to spend more. But here's the thing, my friends, do not spend more. The third tip here to lower your credit utilization ratio and boost up your FICO score is actually opening up a no annual fee credit card. Let's move on to the 5th tip here. And the 5th tip is to keep your old accounts open. Now, you want to make sure you keep that oldest credit card you have open. Do not close it. If you close your oldest account, then the average age of your credit accounts actually goes down. All right, my friends, here's the 6th tip. Apply for a secured card. A secured card is essentially a credit card, but it's actually more like a debit card. Here's what happens. You put down cash as collateral. And what I mean by that is you actually first give the credit card company like $1,000, let's say. In exchange for the $1,000, they give you a card. It's basically like a debit card because as you spend money, you can only spend as much as you put down, so the $1,000 basically. However, here's the difference. If you have a debit card, your transactions don't actually get reported to the credit bureaus of Experian, TransUnion, and Equifax. So your FICO score never actually gets impacted with a debit card. Now, banks oftentimes offer these types of secured cards. Another one that I think you should check out is called SELF, S-E-L-F. Self is a type of secured card that you can look up online. All transactions can be done online, and again, that card also reports your transactions to the credit agencies. If you do one misstep with a secured card, that could negatively impact you. So again, if you're gonna go this route, you really gotta make sure you're on top of it. The 7th step, my friends, is actually becoming an authorized user. Now, essentially becoming an authorized user is you get all of the benefits without having to do any of the work. If you want to become an authorized user, find someone you trust. In other words, find someone who has a long credit history, who makes payments on time, and who you can rely on. A family or friend could be a great type of person to ask. Now, an authorized user essentially just gets tacked on to that person's credit card. My husband and I actually did this as well when he was building his credit. He became my authorized user because he knew I paid my bills on time, I have good credit history, and that automatically gave his credit account a boost to basically equal my credit score. And that is how you can boost your credit score immediately too. Now, here's the downside though. If the person that you are attaching your name to misses any payment, has late payments, or goes into bankruptcy while you are the authorized user, then that is so bad for your credit. So again, that's why it's really important that you find someone that you can trust. Some credit card companies that I know of that actually do offer the authorized user benefit is Chase, American Express, Discover Card, and Capital One. Tip number 8 is actually becoming a co-signer. So typically speaking, this works on larger type of loans. So for example, a car loan, a student loan, something like that, even a mortgage loan. And what happens is you have a primary person that pays the bills, and then you have you, the co-signer. The co-signer is basically someone who is the backup payer. Let's say you're the co-signer with your spouse. Your spouse has a better credit score, and then your spouse is going to make a car payment. You don't actually have to make any type of payment, and you, similar to the authorized user, gets the benefit. But let's say your spouse doesn't make payments, then you as the co-signer will be the next option. So you really got to make sure you make those payments on time. The 9th way of actually increasing your FICO score is negotiating with your lenders. When you give your lender a call, you can ask them and let them know, hey, I really want to make the payment, but right now I'm strapped for cash. Here's how much I can do each month. And chances are, if you give them an outline of what you can do, let's say the payment is $300 a month and you can do $250, they're going to work with you. And the reason why is because they want you to pay off that debt. And finally, my friends, the last tip to boost your FICO score is actually freezing your credit. Yes, I actually mean freeze. Here's how you can do that too. First, you need to call each of the 3 credit bureau agencies. So we're talking TransUnion, Equifax, and Experian. You need to give them a call, and you need to let them know that you want your credit frozen. And the reason why is because there is one victim of identity theft every 2 seconds. There are over 1,000 plus data breaches every single year. And you might even remember the data breach for Equifax, which is one of the 3 credit bureau agencies. In fact, the losses totaling from identity theft total $2.8 billion every single year. And that number is only going up as hackers get more and more tech savvy. A frozen credit is actually going to help protect you from identity theft. Because my friends, let's get real. If your identity is taken and stolen and they open credit accounts, they might even file for bankruptcy. It could take you 6+ months and 100 to 200 hours to resolve and to recover from those effects of identity theft. Get out there ahead of time and freeze your credit. It's not going to impact your FICO score, but it's going to make sure that no one can take out a loan without your approval. And that's everything you need to know in order to increase your credit and save thousands of dollars down the road. However, having a perfect credit score is only good if you know how to put it to good use. So if you click right here, I'm going to show you exactly what you can do in order to start building wealth today.